Hi, this is estate planning lawyer Michael Pevney, and in this video we are going to talk about if your beneficiaries have to pay income taxes on their inheritance. But before that, if you're interested in more estate planning information, please subscribe to this channel, give me a thumbs up, and ask an estate planning question in the comments. I'm usually able to respond. So inheritance taxes, some states have inheritance taxes, and there is a federal estate tax. There's a huge exclusion amount when it comes to estate taxes federally. Right now, it's close to $13 million for a single person, and it's close to $26 million for a married couple. That means that not a dollar of estate taxes will have to be paid unless the total estate, the value of your stuff when you pass away, and it also includes things like life insurance benefits, are from zero to almost $26 million. None of that stuff is taxed. And actually, for federal estate taxes, your beneficiaries don't actually have to pay any of that tax. It's paid by your estate up front. It's valued, divided up, whatever goes to the government, and then the inheritance goes to all of the beneficiaries. So when it comes to federal estate taxes on stuff that your beneficiaries are going to get, their actual inheritance, they're not going to have to cut a check to the IRS for any of that. Now, there are some states that do have inheritance taxes that might have to come out of the beneficiary's cut of everything, but where I practice in California, there is no inheritance tax at all. There is no estate tax at all. So the main thing we would really have to deal with is that federal estate tax. So we're talking about kind of the 1% of the 1% that have to actually, their estate will have to go through and pay federal estate taxes. And once you get over that $26 million mark, every dollar is taxed at close to 40%. So it's a heavy tax load, and there are ways of avoiding that and achieving your goals, whether that's there's kind of fancy life insurance things you can do. Obviously, if you give things to charity, that stuff's never going to be taxed, and there's ways of skipping, the next generation and having things go on to the generation after that for the very, very wealthy. So assuming we're talking about estates of less than $26 million for a married couple, your beneficiaries do not have to pay an inheritance tax or any sort of income tax on that property. But now listen, once the property becomes theirs and maybe that property goes up in value, they might have to pay capital gains taxes on it. So you inherit stock or you inherit real estate, and it's worth a certain amount on the day that the person died, and then it goes up in value and it's worth a higher amount later on. So you inherit a home that's worth $500,000. It goes up to $1 million, and you want to sell that house. If it's not your primary residence, then it's not subject to federal exemptions for capital gains taxes. So yeah, you're going to have to pay capital gains taxes on that stuff. And then there's another category where it comes to inherited retirement accounts, inherited IRAs, inherited 401ks. Because remember, when the person that passed away put this money into those retirement accounts, it was never taxed. It completely bypassed income taxes, unless of course we're talking about a Roth account. So I'm talking about traditional accounts which greatly outnumber Roth accounts in terms of monetary volume. So if you do inherit a retirement account, the federal government does have specific rules, because most of that money has never, ever been taxed, even that initial income tax on the person that's died. So there are specific rules about how quickly you have to take that money out of that retirement account. And then at that point, those inherited IRA funds, when you take them out of those accounts, then they are taxed at your income tax rate. So there can be a very strategic way of doing all of this. If you have a financial planner or a financial professional or an accountant, it can be done in a strategic way to minimize those taxes as much as possible, and coming up with a plan over the next 5 or 10 years to get all that stuff out of the account. But for the large majority of people, excluding retirement accounts, you are not going to have to pay any income taxes on your inheritance. And that includes, by the way, life insurance benefits. Life insurance benefits are not taxed. You don't have to pay income tax on them unless it's over that $26 million mark. Again, there's not going to be any federal estate taxes on them. So if you've got any questions about this, inheritances, setting up an estate plan, or anything else related to estate planning, you can set up a time to meet with me for free if you live in California by following the link in the description. Please subscribe to this channel for more estate planning information, and thank you for watching.